what's going on, people? I hope you guys can hear me okay. I hope you guys are having a good day. I am excited about our conversation today. We're actually going to talk a little bit about one of what you and I have talked about in the past as one of the key pillars to wealth, and that is home ownership. That is the importance of owning a home. That puts you in the category of a wealth builder because you're then able to take those rent payments, and instead of paying rent, you are paying yourself because you then become the landlord and the renter. And the person that I brought in that I think can really address this issue really, really well is an old friend. I've been knowing this brother since I don't know, since Dougie Fresh was a teenager. And his name is Mr. Brian Raspberry. And Brian is he's a mortgage loan officer with Nova Home Loans. Nova Home Loans. He's licensed in Arizona, California, and Kentucky. And we're going to talk more about that, about fixing your credit, getting your first home, stuff like that. But before I begin, I want to welcome Brian to the podcast and ask my brother, how are you doing today, man?
I'm doing pretty good. What about you?
Doing very well, very well, very well. And so I see some people coming in here, and so I want you to kind of, if we can, as we get started, can you kind of talk about just, you know, your background a little bit and how we got to where we are, you know, right now?
Well, my background is actually in real estate. I've been in real estate now for about 14 years. Originally from Louisville, Kentucky, and moved out to Phoenix, Arizona area probably about 20 years ago. So I'm very much in touch with not just the Arizona market, but with the Kentucky market too. As Mr. Watkins mentioned earlier, I'm licensed in California too. So just really here to kind of help people and kind of educate them on mortgages and how loans work and actually how to get into home ownership.
Okay, so home ownership. Let's start with those basics, you know, just so everybody can kind of know where we're coming from with this. And I think people have an idea of this, but I'd like to hear from, in your words, what are some of the advantages of, you know, getting out of the space of renter and being in the space of owner when it comes to real estate?
Absolutely. Probably the hugest advantage is actually having something to call your own, and to call your own and to pass down to your heirs. I mean, there's nothing better than actually having something that you can call your own and be able to pass it to your children and really kind of put your foot in place to be like, this is mine. I have some type of ownership here, because a lot of people are just thinking it's okay to rent, and renting's okay temporarily, but in the grand scheme of things, it's all about ownership and actually having a piece of the pie.
Well, you know, and I agree with you. I mean, I think, you know, everybody likes pie, and nobody wants to go through life baking pies and just serving pies to other people. You want to actually get a chance to eat too. And so, you know, Brian Raspberry, that's who I'm speaking with, you guys, in case you just came in. You know, so why don't we sort of talk about that? You know, I think just sort of going to the root of this and beginning with this. I know that personally, I started off, you know, with a renter's mentality. You know, my thought was, if you just paying rent, you got a place to stay, you're doing good, you're okay. And clearly, obviously, you know, that mentality shifted over time. You know, what do you think sort of lies at the root of why so many people just rent their whole life and never take that leap into home ownership? What are some of the obstacles?
Yeah, some of the biggest reasons why people don't will continue to rent and don't buy at all is just they think they need to have a lot of money to put down on a home. And we can kind of talk a little bit more about that as we go on. And the second thing is credit. A lot of people just assume, all my credit's really messed up, so I'm not going to buy a house. I'm just going to continue to rent. And the third biggest thing I hear is, I don't want to be responsible if something happens to the house. If it breaks down, I can just call my landlord and they can replace it, yada, yada, yada. But I always like to come back and tell people, you are at the mercy of that landlord. If that landlord decides he or she wants to raise the rent, if they want to sell their place, you're out moving again. Where if actually you're owning a home, you're not having to raise your rent or raise your payments or out moving out. And to fix the issue with, well, what if my house breaks down or something goes on wrong here? That's what a home warranty is for. So I always encourage all my clients to pick up home warranties.
Well, you know, I think that's interesting, you know, when you talk about that. I mean, just all the things you laid out. I guess I'll start with that first one. You know, my credit's messed up. That's what I hear a lot, right? I hear a lot of people that feel that because of their credit situation, they can never be a homeowner, and that becomes an obstacle when, you know, when I deal with people that I call the Negro naysayers. These are the people, because, you know, I'm all about Black wealth and wealth in the Black community, and the Negro naysayers, by definition, are people who find a problem for every solution. You know,
Yes.
if you want to sit back and whine and cry about how hard it is to be Black and how Black people are broke, struggling, the struggle's real, we can't get out, it's too hard. You know, they'll sit with you, they'll sing along, they'll be background singers, you know, if you want to sit and whine all day. But when you actually say, well, you know, let's stop whining for a second and let's actually solve this problem. Let's figure out what we can do to change our condition, to break cycles. We must break the poverty cycle that exists in so many of our families. And
Absolutely.
you say, you know, and so we'll start talking about things like investing and home ownership, and that's that first thing that comes in. You know, everybody can't afford the down payment. You know, not everybody, Dr. Boyce, has the credit to do it, etc. So people like you, I think, are valuable assets to the community because you know, you actually, as a, you're not just a person that knows real estate. You actually understand the financial side of it. I mean, you are a mortgage loan officer. Let me make sure I say that right. Give you proper mortgage loan officer. So when I hear that, I hear mortgage and I hear loan, and then I hear officer. You know, like Officer Smith, right? That tells me that you are a person that has some sort of understanding of where this money might be and where the opportunities lie. So can you kind of speak on that part, the credit part, in terms of, and maybe even give an example if you want, of you know, scenarios where somebody might have thought their credit was too bad to own a home and you were able to help them figure out solutions?
Absolutely. Well, just to kind of give you an idea with the credit, the minimum credit score that you need to get into a home is a 580. Now, we all know a 580 is not too good. Let's just be honest. But a 580 is the minimum credit score. And with that being said, 3.5% down is the minimum down payment for a 580. Now, can you go lower than a 580? Absolutely. The cutoff is actually 550. But if you do 550, you need to have at least 10% down. Now, will everybody get qualified with a 550 with 10% down? No, because if you had a bankruptcy recently or car repossession recently, that's just not going to fly. So every scenario is looked upon differently. But as far as fixing your credit, the whole goal is to get you the highest credit score possible so I can get you the best rate and terms as possible. So I actually help people get their credit repaired. And I do it in-house internally. There's no extra fees to do it. We just take care of it internally. A lot of people don't know is if you pull your three major credit, Tri-Merge, TransUnion, Equifax, and Experian, they'll give you all the information that you need. And then once you get it, I can actually sit down and show you what you need to do to raise your score. So let me give you a small example. One is your credit card history. A lot of people say, well, my credit cards are maxed out and my scores are low. Well, you're exactly right. But if you can get your balances at 30% or lower of what the limit is, your score is going to jump anywhere from 20 to 60 points overnight. And that can be done overnight. But I realize that not everybody has the money to pay that down right away. So what are we going to do? We put together baby steps, a lot of it from Dave Ramsey's class, to actually show you how to pay those debts down to put you in a position. So if you actually follow the steps, I can have you ready in 3 months, 6 months, a year. It just depends on how much credit you have going on.
Wow. Wow. Everybody, I want you to know who I'm talking to. Some of you guys just came in, but you know, this is what we need to be hearing. We need to be hearing from people like this. This brother, his name, and I've known him for a long time, his name is Brian Raspberry. He is a mortgage loan officer at Nova Home Loans. So he doesn't just know how to talk about finances. He's actually doing this on a daily basis. He knows where the money is. He knows where the opportunities are. He's licensed in Arizona, California, and Kentucky. But these are principles that can also apply everywhere. And make sure you hit that thumbs up button. If you're on YouTube or Instagram or Facebook anywhere, make sure you hit the thumbs up button. And also, just as a side note, I want everybody to know that tomorrow night, I'm doing a seminar on how to quit your job and increase your income, talking about multiple streams of income, how I was able to leave the plantation and find a way to survive, and all the little tools and tricks that I learned along the way. So if you're interested, please feel free to go check it out at drboyceseminars.com. That's drboyceseminars.com. Now, Mr. Raspberry, so let me jump in and ask you about this. Okay, so so it seems to me that the two obstacles for home ownership, which we know is critical in the Black community. I've pushed the students in the Black business school to before the new year, everybody invest at least $5 in shares of stock, and I've shown them the apps and everything how to do that. And then the next thing I think I would like to see in 2019 is for everybody to try to become a homeowner if you're not one already. And it seems like the two big obstacles are the credit and the cash, right? Like those seem to be the two big things. Is there anything else like that sort of serves as an obstacle that kind of slows people down from sort of making that leap into becoming a real estate owner as opposed to a renter?
No, you've actually touched on it really well. It is the credit and it is the cash. So we kind of talked about the credit already. Let's talk about the cash. So I realize not everybody has 3.5% down. I get it. But again, that starts with baby steps, with putting a little money to the side every day to make it work. But there are other ways that we can get the cash. Depending on which state you live in the United States, a lot of states actually have down payment assistance programs. It's free money. The government is giving away free money for people that want to buy the home. But what's the catch? Because there's always a catch when it comes to free money and the government. So we all get that. You're going to be paying a little bit of a higher interest rate. Interest rate historic levels is about 0.5% to 1% higher to get the free money. And they usually want you to be in the house at least 3 years. Well, if you look at the rate of return on the appreciation, to pay 0.5% or 1% higher to get free money, to get into a home that you can call your own, you can always turn back around with the appreciation and refinance that home down the road and get a much better rate, again, as long as your credit is where it needs to be, and you can move on with that. The other thing is cash, getting the down payment is actually, you can get it as a gift. You can get it from family members, whether it's grandma, grandpa, aunt, uncle, brother, sister, whomever it may be. They can use it as a gift to provide to you for down payment. So a lot of clients just don't know that, and I really want to get that message out.
Well, well, I'll tell you what. I'm looking at some of the comments, man, and I see a lot of people in here that are really feeling what you're talking about. Now, who was it? Let's see. Angela Owen says, "Thank you, Dr. Boyce. I listened to you, and now I'm a homeowner." Everybody, please clap for Angela. Tell her congratulations, and we're very proud of you. So give her a digital round of applause, and I love it. And also, I want everybody in here who has a credit score above 580. Anybody who has a credit score above 580, just say yes, I do, or yes, I am, or whatever it is. So the minimum he said was 580 to be able to get a loan or to be able to get into a home, at least based on the system that he's within. And I've actually, I'm telling you, I seem like I even heard somebody say you can go as low as 500 in some cases. Is that true?
That is very true. You can go into 500, but you got to have a little bit more skin in the game. And now you're talking 20, 30% down, because we don't want to go back to the old ways of 2008 when we had the recession. A lot of that problems came from anybody that had a 500 in a heartbeat was getting a home loan. That's not happening anymore. So yes, you can get a 500. The terms are going to be a little bit more on the lender's side, meaning you're paying a little bit of a higher rate. You got to put a little bit more skin in the game. And you really can't have, even though your credit may be beat up, you have to have a letter of explanation explaining what has happened. Did you come out of a bankruptcy 3 or 4 years ago? Did the primary breadwinner, did they pass away? So there's reasons why that credit score might be low because of that. Now, if you're just historically just late and not paying your bills, and that's a different story. So, but yes, you can get in with 500 in some situations.
Well, let me ask you this. I see a question here. Let's see. Marlene was asking, do you think this is a good time to refinance? What are your thoughts on that?
It depends. I mean, are you looking to refinance to try to get a better rate? Are you looking to refinance to try to consolidate debt? Or are you looking to refinance to improve your home? So that's kind of a open, loaded question.
Right. It's, well, it's funny, with my background, being in the financial area as well, I've just found that the answer to most financial questions is it depends. Like usually somebody says, should I buy should I buy a Mercedes Benz? And I'm like, well, it depends. It depends on it, if, you know, what the price is. Well, should I buy a Mercedes Benz for $50,000? Well, it depends. If it's worth $50,000, you know, like, you know what I mean? If it's not worth 50,000, if, you know, whatever. So I think it's like a lot of the questions are, you know, the answers seem to be it depends, because you got a lot of levers that you can move around.
Absolutely.
And one of the things that that we talk about a lot, you know, in the Black Stock Market program, when we're talking about investing and how all that works, how the financial mechanics works, is you know, we'll talk about, you know, the fact that there are so many different variables and levers that can be moved in a financial deal, and you want to understand how those work. Like, for example, if you go see a car dealer, and the car dealer says, you say, I want that car, and the car dealer says, well, the payments are going to be $400 a month, and you say, well, I can't afford $400 a month. A lot of times a car dealer will say, no problem, your payments can be $325 a month, right? Exactly. And what some people don't understand is that the reason he said no problem is because he's giving you this, but he's taking away that, right? He's something, some other variable. Now, instead of a 5-year loan, you might have a 6-year loan or whatever. Yep. You know, so, you know, when you look at all those factors, the time, the payment amount, the interest rate, all these things can be kind of moved around. And I think it's important to understand it. It almost seems to me, I want to ask you about this, the financial crisis. Were you in your line of business during the 2007, 2008 crisis, or did you get in after that was done?
Actually, I got into the mortgage in 2004. So I was in it when it was very good, and I was there when it was very bad. And I'm still in it today.
What was that transition like? Like, what was it like sort of going from, you know, from feast to famine like that?
It was tough. It really was tough. And to try to hold on to what you kind of built up, and all of a sudden it gets pulled out from you really, really quick. I mean, I saw a lot of people come and go in that business. And now after 2008, they're now making all loan officers be licensed. So you have to go through some grueling tests, and you got to know your stuff. It's almost kind of like being a stockbroker. You just can't be a stockbroker or an insurance agent without taking all your tests. So there's a lot of tests that lead up to that. So it's the people that are in the business now really know their stuff, or they should know their stuff.
Wow. So the loan officers now have to be licensed.
Yes.
I have my own ideas as to why that would be the case, but I'd be curious, what do you think was the reason that they required loan officers to be licensed?
There's a lot of things going on the table, a lot of shady deals, and putting people just in. I mean, you had, for example, you had the pick a payment plan. And we all know that's just a bad deal. I mean, you can pick a payment from interest only to a negative amortization payment to a full payment. Well, everybody's going to pick the cheapest payment possible. That's what they're going to do, not realizing you're actually losing that home. It's really a slow repossession. That's all it is. And for loan officers to put those clients in those type of payment plans and not actually explaining what's happening, that's a bad deal. So now you actually have to explain every option. Now that payment plan doesn't exist today, but when you're actually putting together a loan program for somebody, you have to break down, this is what the payments are, and really, really educate them on what they're doing and what they're buying.
Yeah, you know, that is interesting. I mean, it does kind of speak to why, you know, one of the things we teach the students in the Black Business School is that everybody should be financially literate. You know, that, like, don't think that that's just somebody else's job. You should be financially literate, just like everybody should be literate. You know, yeah. Just like you should know how to read, you should understand your money, because you probably spend as much time, you know, looking or thinking about money as you spend actually reading things. In fact, I'd say people spend more time thinking about money than they spend actually reading. People don't even read anymore, but they expect you to be literate, but we don't expect people to be financially literate, but you spend more time thinking about money than you spend reading a book. Which one do you think matters the most, right? So, and the reason that that's important is because what this kind of says to me is that even though there have always historically been laws and protections that good-minded people have tried to put in place to protect the average Joe Blow from the financially savvy person, you know, from the predators or the snakes or the people that are trying to just get over on you. Even though they've tried to put protections in place, no set of protections are foolproof. Like, nothing can protect you all the time. It's just like, you know, even though I might have police all throughout the neighborhood, if a rapist or a murderer gets in my house, I still might need to defend myself, right? Or I still might need to know how to avoid dangerous neighborhoods, or whatever. And so, I think financially, what I really do see is this has always been true, and I think it will always be true. Warren Buffett said that, financial literacy and investing is pretty much a wealth transfer from the financially illiterate to the financially literate, right? And then it's kind of a harsh way to say it. It almost sounds very like a very Republican survival of the fittest kind of thing to say, politically incorrect. But that's what happens, and all throughout history, smart, prepared, educated people take things they're able to take things that they want from people who are not prepared, who are not as smart, who are not as well trained, who are not as educated. And because at the end of the day, somebody who's laying out a financial deal that does not work to your favor, all they got to do at the end is say, well, look, I told you what was going on. I asked you, maybe I didn't explain every detail to you, but I showed you the contract. You read it, you looked at it, and you signed it. So why am I held accountable for the fact that you didn't understand what you signed? And I almost feel like that's a reality that's going to exist no matter how many regulations they come up with. Can you kind of speak to some of that?
Yeah, I know exactly what you mean. You can really just kind of ignore and just kind of throw people into payment plans, but the banking industry, the mortgage industry as a whole is a lot different because it's so regulated now. And what I mean by that is the government can come in and basically backdoor you and look at all your files and comb through it. And if you put somebody into a mortgage that realistically shouldn't have been in this mortgage because there's clues and things when looking at their financials, not only is a loan officer in trouble, the underwriter's in trouble, the mortgage company can be heavily fined or actually just wiped out. So it's definitely changed from 2008. So you're right. I mean, people can still do certain things and get around it. I get that, but it's a lot tighter now than it was prior to 2008 for sure.
Well, I think that's a good thing. I think that's a very good thing. And what I've noticed is that the amount of regulation it tends to ebb and flow. When times are good and everything's great and everybody's making money hand over fist, they start letting everything kind of loose. It's like a party where, everybody's having fun, the liquor's flowing, ain't nobody getting hurt or whatever. But then, next thing you know, God forbid, somebody dies, from an overdose of alcohol or drugs, or they die in a car crash. You know what I mean? And then suddenly everybody wants to scrutinize and be extremely careful. But then as enough time goes by, the tragedy kind of sinks further into the past, and you start going back to where you were before. I'm a believer that Wall Street and bankers, they kind of want that unregulated space where they can kind of do whatever and do what they were doing when times are going really well. I believe that at some point we'll probably get back to that too. And I just think people should be ready too, in case the regulators don't protect them, because at the end of the day, remember the government is controlled by the corporations and the bankers and Wall Street. They have more say than regular people do. So you got to be able to defend yourself. Now, let me ask you this. First of all, let me re-up and let everybody know what we're doing. I am talking to Mr. Brian Raspberry. Brian Raspberry is a mortgage loan officer with Nova Home Loans. He's licensed in Arizona, California, and Kentucky. We're talking about getting the money for your first home, fixing your credit, all the things that everybody needs to know. I want to give everybody Brian's contact information in case you want to reach out. Okay, Brian, I wanted to ask you this. Let me tell you, I have novahomeloans.com/brian.raspberry. Is that the right email?
That's correct. That is correct.
URL, website?
Yes, that is correct.
Okay, so novahomeloans.com/brian.raspberry. That's RASPBERRY. RASPBERRY. novahomeloans.com/brian.raspberry. RASPBERRY, in case you want to reach out to him and ask him questions or do business with him. Again, he's licensed in Arizona, California, Kentucky, and he probably knows people that are licensed in your area or has connections and things like that. He's a good guy, and I've known him for a really long time. Now, okay, Tammy Howard, I see your question. Says, I'm interested in your Black Business School. Okay, I see your email address. Tammy, if you're interested in the Black Business School and you'd like to join, which you should, we have a free membership. If your money's tight, that's okay. We come one, come all. It's like an economic church. Everybody's welcome. We have special programs. they cost you $3 or $4 a day. Like, right? Like, imagine that if you could go to college and learn from college professors for $3 or $4 a day. Crazy, right? But if you can't, if that's too much for you now, that's all good. Come in, come one, come all, no matter where you're at, whatever level you're at, we can help you. And when you get done with the curriculum, you can actually get a degree from the school. So go to theblackbusinessschool.com. That's theblackbusinessschool.com. I also created something else recently that I think will help you guys keep up with what's going on in the financial world. It's at theblackfinancialchannel.com. There's a YouTube channel that is nothing but financial stuff. So literally on theblackfinancialchannel.com, everybody should go there and subscribe. theblackfinancialchannel.com. I'm actually going to do updates on things like the stock market. We're going to talk about financial stories that come up in the news, just little short videos on financial topics that more reflect more of what's happening in the world. Okay, so if you kind of just want to sort of stay in the loop on that, go to theblackfinancialchannel.com. You don't have to hear me talk about anything other than financial stuff, and all the guests will be talking about that as well. Because people, just so you know, Brian, the ongoing debate is whether or not Boyce should only talk about financial stuff, or if he should talk about everything that's sort of happening in the Black community. So I decided that I would have that space where it's all financial all the time. So anyway, let me ask you this. Let me jump back in. Let's talk more about this home loan things. Okay, so let's say that, like, what do you think would be sort of the problem? I have some thoughts on this too. I definitely want to hear your thoughts, man. What do you think would be the problem if I'm sitting there, right? And let's say I'm a renter and I am like, I should work on my credit and I'll do it eventually. I should save up for a down payment, but I don't feel like doing it now. And I just wait and I don't act, and start doing something as a result of what I've heard you say about, the importance of home ownership and stuff like that. Like, what would you say to a person like that?
Renting or buying is not for everybody. I get it. There's always going to be renters. There's always going to be buyers. But when you actually have somebody that's sitting on the sidelines, I like to remind them that buying a home is actually a source of future income, because now once you buy your first home, you might decide that you want to buy an investment home or a vacation home or whatever it may be. And it could be another streamline of income for you. So I always try to talk people off the ledge when they don't really want to buy or they don't want to fix their credit, because even if you don't want to buy a home, fixing your credit should still be a major priority. Until you're in a position where you're paying everything cash, actually fixing your credit is so important, because you need it for jobs, you need it for job interviews. I mean, you need it for insurance today. You need it for a lot of things. So, I mean, fixing your credit, that should always be a priority, regardless if you buy a house or not.
Okay. Yeah, I agree with you. I think that it's almost like, I don't know, when I think about it, some of these things start with when you're young, I knew someone who told me that she hadn't gone to the dentist in 25 years. And I said, well, why haven't you gone to the dentist in 25 years? And she said, well, when I was a kid, my mother never took me to the dentist. So it just wasn't important. And I think there are some of us, it seems, where we get a little bit of a financial hole. Maybe the student loans get too high and you can't pay them anymore. I don't know if you know, but half of all Black college graduates have defaulted on their student loans, which I imagine, you and I both know is not going to be good for your credit score, right?
No.
And it's almost like people get to the point where they say, well, why even try? Why try to build and plan when, all I need to just figure out how to survive. Like, that's what matters. And it almost seems like renting is a survival mechanism where you're not thinking long-term as a wealth builder. You're thinking short-term. Like, okay, if I pay rent this month and give money to this landlord, I can have a place to live now, and then I'll worry about next month when next month gets here,
Yeah, I mean, again, why anybody would want to rent and they have the ability and the means to buy a home? I mean, the government is basically created it for everybody to buy a home. So if you don't have the money, great. State has free money. So really, your only priority really is just to fix your credit. I mean, fixing your credit is not that hard. Take your time, sit down with a professional. There are people out there that charge you to do it. I just showed you a way where you can do it on your own by pulling a tri-merge on your own. So taking the time to fix your credit so you can put yourself in a better financial position is so key, because I don't know why anybody would want to be at the mercy of a landlord. You're basically, he or she can change anything they want at a drop of a dime, change the payment, decide to move, and you're moving. For an example, I had a client of mine that actually had been moving 4 times in the past 5 years because her landlord jumped up the rent and or sold the place. And after talking to her for over 5 years, she said, you know what, Brian, you're right. It is time to buy. We got her credit on par, and she just bought her first home 2 months ago. So she was actually happy that I stuck with her for 5 years. That's a long time to stick with somebody, but I was determined that why do you want to be at the mercy of the landlord? Doesn't make any sense to me.
Well, you know, it's funny, man. Yesterday, I got a phone call from one of the young people I mentor. And, you know, I said, so what are you doing? And she said, oh, we're moving. And I said, you're moving? What's going on? And she said, something. She said, you know, I think her and her mom and her family members live in the same house. And I think the mom went out of town and somehow the rent was late and they had to go to court. And they asked the landlord, do you want them to pay up the rent or do you want them to get out? He said, I want them to get out. So she was moving out, and, you know, her and her siblings and I think a cousin were living in the house, and now they have nowhere to go. They were all scrambling, trying to figure out where they were going to live. So literally they were, you know, in a nomadic home, you know, homeless state, technically homeless. If homeless means you ain't got nowhere to live, you know, that's kind of where they were. Right. And I think that's kind of scary, you know, and what I'm thinking about, and in the same time, I said, so what's your plan? What are you going to do? And she said, well, I'm gonna get my taxes back and I'm going to go. And when I get my taxes, I'm gonna go get an apartment. And I said, well, you know, maybe there's a process where at some point, maybe not this year, but maybe at some point you'll be thinking, when I get my taxes, I'm gonna go find a way to buy a house, you know, and so I think that's, you know, I think that your point is perfectly made. Last question I'll ask, and so you guys know, I'm going to bring Brian back, and we've got a real estate program in the Black Business School. So I think I'm going to ask Brian, I'm putting him on the spot, asking him publicly if he'll come and talk to our real estate students in detail. But I'll ask this question. Somebody asked about foreclosures. You know, does that come up as far as like buying foreclosures? Is that even in your space at all, or is that something that somebody else kind of deals with, or what?
You mean like as far as buying foreclosed properties or helping people that actually have foreclosures in the past?
Why don't we cover both? Why don't we start with buying foreclosure? Because now that you mentioned, I'm like, yeah, that's right. That's a good point. So maybe we start with let's say I want to buy a foreclosure. I want to figure out how to, you know, like what the process would be, stuff like that. Is that even something that your company deals with, or that you deal with personally, or?
I don't personally deal with buying foreclosures, but I've been around it enough to kind of give you guidance on where to go. The biggest thing is you want to talk to a realtor who specializes in buying foreclosures. So there's several different types of realtors, but you want to look at a realtor who specializes in foreclosures. Another avenue that you can get into is whomever you may bank with. Banking departments are always buying foreclosed properties, AKA Chase, Bank of America, Wells. They have a laundry list of foreclosures. And if you actually speak to somebody in their foreclosed department, they can give you the insights on what's on the market, but not really on the market as far as foreclosed properties.
Okay, that was a few $100,000 worth of knowledge right there. So looking to, you know, invest in foreclosures, there you go. And then there's places, you guys, just in case you don't know, in theblackrealestateschool.com, Andre C. Hatchett and all of his friends that he knows in real estate, that's all they talk about is all this stuff. Flipping, you know, investment properties, Airbnbs, there's all these different ways you can make money from your real estate. What we're focusing on mostly today is just taking that first leap into becoming a homeowner. And the reason that you want to take that leap is you guys have heard me talk about the 3 pillars of wealth. These are typically the 3 avenues through which people become wealthy in America, where they become financially secure. The 3 pathways to financial security, just like people tell you that to get to God, you go through Jesus. You know, you learn that in church. Well, to get to wealth, you got to go through these pathways. Either one of the 3 or all 3 of the 3, or whatever it is, 2 of the 3. One is stock and bond investing. The other is real estate. The other is entrepreneurship. That is how you don't just sort of survive. That's how you get ahead. So, Mr. Raspberry, so last question, then let me ask you this about the other side. Let's say that I, you know, went and I bought a home, you know, and I got the financing, and I hit a financial hardship, and so, you know, and I'm either close to foreclosure, I've hit foreclosure, I'm dealing with all this, getting papers from the bank and all that stuff. how should I even approach that? You know, because that's already emotionally devastating. You're already feeling like a failure and stuff like that. You know, what kinds of conversations do you have with clients that are kind of running into situations like that?
I get them quite often, believe it or not. But with foreclosures, just because you had a foreclosure in the past doesn't mean you can't buy in the future. And you can. There are certain waiting periods depending on if you do a conventional loan or a VA loan or an FHA loan. So there are waiting periods, but there are now investors out there that I will actually rent back out to somebody for foreclosure after a short amount of time, like less than a year. Again, letter of explanation explaining that. Was it a death in the family? The breadwinner died? So everybody's scenario is a little bit different. But you can get into a home after a foreclosure. A lot of people think once I have a foreclosure, I can't do it, but you can.
Interesting. Okay, well that's good. That's good. I mean, I think that's important too. You know, it's almost like you know, if you're in a financially messy state, like I've been in financial messes, you know, there's almost like a sense of shame and a sense of hopelessness that I think people feel, you know, where they just say, you know, I failed. I'm financially broken and weak. You know, it'll never get better. And I think it's important for people to know that everybody goes through it. That's why, even though it was hard for me to do, I've openly talked about having bad credit, you know, bankruptcies, you know, no money in the bank account, all of that stuff, because I think it's important for people to just know that just because, you know, you made a mistake or just because you're a little bit behind, you know, that doesn't mean you can't start making progress to improve the situation. And not only can you do it, but you have to do it. You have to do it, because if you let it keep festering, you know, it becomes like an illness in the body. The same illnesses that kill us when we're eating all this soul food, and the doctor, you know, you're feeling a little pain. A lot of us have those uncles in the family who died because he had a pain and he just didn't want to go to the doctor because he thought it was just going to go away, and the pain kept getting worse and worse. And then he goes to the doctor. The doctor says, you got cancer, and we could have operated on it and made it better, but now we can't do anything, right? So I almost feel like these financial health problems are things that you have to address. And if it helps anybody in here, I'll even mention, you know, when I was about a year and a half, 2 years ago, you know, every year I would just keep gaining this weight, Brian, man. I kept getting, every year I get, just for whatever reason, I gained 10 pounds just because I was a year older. And I was like, I can't keep going in this direction. What the hell, man? I'm going to be obese. Like, I was already getting like on the chubby side, you know? and you know, and they take my blood pressure, and the lady's like, oh, your blood pressure's off the charts. Like, we don't even have a number this high, you know? And, you know, I'm like, oh my God, I'm going to die. Like, if I keep neglecting this, I'm going to die. So I was like, okay, boys, rock versus hard place. We got to make a change. So I went on this journey where I just started eating a little bit better and taking my fat ass down the road, you know, just wobbling down the road, trying to run a little bit, embarrassed because I can't run, joints hurt, tired as hell. But the weight started coming off and the energy level started going up, and I started feeling like alive again for the first time. And I felt hope and I felt power, because I said, I actually feel like I control my destiny now, right? And I think it's almost the same way financially. Like just start with the little steps, the little things, and that will give you that hope and give you that empowerment that you need to feel like you can keep going. As Albert's saying, the programs are out here. There are programs everywhere. So Brian, I'd like for you to get the last word. You know, maybe you can summarize some of this and also the programs. Like, are there any programs that people should know about that will help them to sort of make these steps?
Yeah. Well, the biggest thing is really just starting with the credit. So like I mentioned earlier, let's take this one step at a time, because it's not going to happen overnight. Start by looking at TransUnion, Equifax, and Experian. Do a tri-merge credit pool. Look at it, evaluate it. The biggest thing that you can look at when you're looking at your credit is, are my credit card limits 30% or less? If they're not, let's start there. Let's work that number down. Once we get it down, then we can relook at your credit score again. Don't really focus on the collections right now. Work on bringing down the credit card balances, because that's what lenders across America are looking for. They're looking to see, how are your credit ratios? They want to see how you make your payments on time. So I would actually start there right away, because home ownership is there for everybody. It really is.
All right. Well, I love it. I want to say thank you to our guests. And I want everybody, pull out your ink pen so you can write down his information. and I'm gonna repeat it 3 times. And I don't want nobody in here to be like, what was it again? I missed it. His name, Brian Raspberry. Brian, Raspberry is spelled Raspberry, not RAS. It's Raspberry. And he is a mortgage loan officer at Nova Home Loans. He is licensed in Arizona, California, and Kentucky. The website, if you want to go to a URL and find out more and make contact, things like that, you can go to novahomeloans.com, Nova, N-O-V-A, like a supernova, novahomeloans.com/Brian.Raspberry, Raspberry. So that's novahomeloans.com/Brian.Raspberry. Somebody please type that in and please spell it right so other people can have this information, because this is a good brother. I've known him for 20 years, since the 90s. And he probably don't even want me to mention, so I don't know if he cares or not, but he was a great track star back in Kentucky. This man was so fast. He was like literally right there, like world-class speed, and set all these records, and he's being inducted in the Track and Field Hall of Fame in Kentucky. And so I'm super jealous, because I used to want to be that fast, but I ain't got enough African blood to run that fast. This brother was on top of everything. So I've known him since all the way back in those days, and now he's a very smart man doing very important work. And remember, I need you to pay attention to this, because this is your pathway to begin that process of becoming a wealth builder. Do not just build wealth for other people. Build some for yourself. Leave some for your family. Your grandchildren are dependent on you to deliver for them. And the question is, what are you going to do? Now is the time. You're spending money at Christmas. Spend some money on your future. Spend some money on your family. That's my pitch. Thank you very much, man. It was a pleasure getting a chance to talk to you. Absolutely. Thank you, brother. I appreciate it. Absolutely. All right, everybody. Well, I'm out of here. And don't forget, if you want to learn more about the seminar we're doing on Wednesday night on how to quit your job and increase your income, I'm doing a special lecture. You can go to drboyceseminars.com. That's drboyceseminars.com. Please hit that thumbs up button and the like and share button. And also, if you want to go see our new Black Financial News channel, where we're going to talk about black financial news and financial news from a Black perspective and what's going on in the stock market, all that stuff, go to theblackfinancialchannel.com. That's theblackfinancialchannel.com. So please go there now and subscribe on YouTube, and we'll be a part of all this. And Aramis, you said you missed it. It's okay. You can watch the recording, man. So we're about to get out of here. So thanks a lot again, Brian. And you guys, we'll be in touch soon, brother. I'll hit you up on text, and we'll make that plan for you to come back into the school whenever you're ready. We'd love to do it. All right. Take care now. You too, man. All right.